Okay, so hello everyone, my name is Carina. It's a pleasure to be here with you this morning. And today I want to present something that fascinated me when I discovered, and it's the possibility to use crypto, to use stable coins to change how we deal with cross-border payments today. So I want to know if any of you already use crypto to do international transfers. Please raise your hand if you do. Does anyone? No? Okay. So let me present myself properly. So my name is Carina Farber. I'm Brazilian. I'm currently living in Spain, but I used to live here in the UK, and also I lived in Lithuania previous to it. I'm married. I have a Pomeranian. That's why the fox emoji fits it perfectly. And right now I'm working at the Bitso in a team called Money Movement, so you can guess more or less like what I do. And I've been working in the payment industry for a while now, and I'm really patient about blockchain and what kind of solutions we can build using this kind of technology. So I brought some numbers. We know that the cross-border payments already represent a huge market when we talk about B2B and B2C, but it's still growing. And in the next years, it's going to grow. And it doesn't matter like where your business fit, probably the growth is going to be exponential. So it's a really important part of the operation, and sadly, like usually, it brings like a lot of uncertainty to our business, to our operation, because it's part. It's difficult to do it fast, to do it cheap, so it brings a lot of cons when we try to money move around and to expand to new countries. So basically, like this is what we face today, right? Like the banking systems, they are incompatible. It's how you try to put like a plug in a different country. It's always a nightmare. You always need an adapter. You have like different rules, different regulations, different costs. It's always confusing when you try to communicate with each other. And today, like this is what we usually do. So when you, for example, if you want to expand your business to Brazil, for example, and start receiving BRLs from your customers, and you need to send this money back to the UK, it will go through a lot of different correspondent banks. It will take days. So usually it takes 2 to 5 business days. Each player of the chain is going to take a bite, and you're going to need to pay a different fee for each of them. You also need to deal with the appetite for effects from each company that the money is going through. You also need to be compliant with all the chain. So usually it's really costly to make sure that you are compliant with the regulation. And also you would need liquidity, right, to keep your business up until this money reach the destination. And I don't know if you faced it, but I did several times. Sometimes you receive the money and then you discover that you paid for extra fees that you weren't weren't counting on. You're paying a different FX that you thought you would. So it's quite difficult to deal with this kind of uncertainty. And what really shocks me is that is the fact that you press the play button, you press the send button, and then you need to trust the whole chain that after 2, 3 days the money is going to reach the destination, and the only checking point that you get is like the money was sent, it's being processed, but you don't know where it is, if it got stuck, why it got stuck. Like you need to wait the 5, and then like you usually have like small letters saying it's going to arrive on Monday, but it can take up to 5 business days. So please don't complain before it. And you need to trust. Like if you think of it, it's quite sad that we need to operate in this way. And on average, like 7% of all the money that you send is going to be held as fees. So when I discovered it, like when I discovered that there is a different solution, and as I said, I've been working in the payments industry for 7 years, I guess, right now. So I've dealt with different payments integrations, with different types of payments, and this one really fascinated me because you eliminate all the players that you have in the chain. So basically, you just have the 2 different currencies that you want to trade on, and everything else is eliminated. And you just need to deal with AML, KYC, and FX rates locally. You don't need to make sure that you are compliant with all the chain. And trying it to a little bit to our daily lives, I want to try to explain how this technology works. So basically, imagine that you decide to sell your goods in Brazil. You take a flight, you go there, you sold everything, and then you pick up all the BRLs, you go to a place, and you trade it for gold. Because gold is gold here, it's gold in Brazil, it's gold in South Africa, it's gold anywhere. So gold is a stable asset that everywhere it values the same thing, right? So you trade everything in Brazil for gold, you got like an amount of gold, you pick up a plane, and then you arrive in the UK, and you sell this gold, changing it to GBP, right? So basically, you were able to sell your goods in Brazil without paying any intermediary fee, anything in the chain. Like you changed it from BRL to gold and from gold to GBP. And more or less, this is the idea of the blockchain, of the borderless technology. But because I think nowadays, like, walking around with a little bit of gold in your pockets, not ideally, right? And I hope that your business is big enough for you to carry on a suitcase, right? So imagine that we create an e-gold. That's a paper that says that you traded BRLs for gold, and then you pick up this paper, this e-gold, and you trade it to GBP without leaving your home. It's a nice idea, right? Because you don't have to deal with intermediary banks, and you get the best exchange rate that you can. So basically, this is what we have today with blockchain. You pick up your BRL, you trade it into any coin. It could be a stable coin, it could be any crypto, and then you trade again to the currency that you like. And then you could do it for any currency in the world. And to reduce friction, today we have a kind of coin that's called stable coin that mimics the value of the dollar, of the euro, of the GBP. So instead of doing 2 trades, more or less, you have to perform 2 trades, but from exchange rate, we are doing just 1, right? Because you would change BRL for digital GBP, and then you have the same amount. So you already know how much money you are going to take from it. And for me, like it's pretty amazing because the blockchain is always there, it's always on. The transactions are settling on and on. Also, you don't have the intermediary fees. You don't have to deal with the exchange rate from huge banks. You just need to deal with the market exchange rate, how much money it's worth in that moment. Also, I don't know if everyone knows how the blockchain works, but basically it's called blockchains because blocks are built. So they create blocks with a number of transactions. So let's say 10 transactions per block. And then when a block is in the settlement process, everyone in the chain needs to agree with it. And to settle one transaction, you need let's say the settlement number from the transaction before it. So it's pretty safe. It's really hard to fraud because all the chain needs to give thumbs up that transaction is valid and it's compliant. And also it's pretty hard to manipulate any money movement, right? Because imagine that here someone codes that 1 cent of every transaction that goes through that bank, it's going to be sent to their own account. I believe like it would take some time to discover that 1 cent of that of each transaction had gone to unexpected account. But here it's not possible. And also, it ends the issue that you press send and you don't know where your money is, because everyone that has the transaction ID can check where the transaction is, if it's in the queue for being settled, if it was settled, when it was settled, and so on. So when I discovered it, I thought like, oh, it sounds like magic. Like it solves a lot of different issues that we have today. So basically, comparing one to the other, today with Swift, we have the whole chain that I've already talked about. And with blockchain, using stable coins to reduce the risk, to reduce the uncertainty of FX rate. Because as I said, even with gold, let's say that you went to Brazil, you bought gold, you were bringing your gold in your pocket, and then someone discovers a huge mine anywhere in the world, and gold lost this preciousness and lost value. So with stable coins, you make sure that you're gonna have like the same digital, the same value that you have with the regular coin. And also, I don't know how many of you usually buy stocks and so on, but with crypto trade, it's the same. Like you can use the market price, or you can set limits, how much you want to pay for it. So if you want to go with the market price, settlement is going to be really fast. If you want to play a little bit with the price, then it can take a couple of hours, let's say. But you know where the transaction is, you know in which place of the queue it is, and for sure it's going to take less than 24 hours to complete it. So I wrote here challenges. I want to rephrase it. I don't think these are the challenges to integrate with blockchain technology, but things you need to be aware, because as today you need to find like a good business, a good bank to partner up with. You also need to have like reliable on and off ramps. Ramps are basically what connects the blockchain with the currency, the local currency that you want. So for example, here in the UK, you would need fast ramps or CHAPS ramps or whatever kind of payment that you are going to use to be connected with, and in both sides of the chain. So you need a reliable partner to make sure that you can in and out the money as you wish, and with the service level that you want to provide to your customers. And also to partner up with someone that really takes care about regulatory. I know that about regulation, sorry. I know that crypto usually leads to an idea that you don't know who is sending the money. You have like a lot of uncertainty and a lot of risks, but it's not true. Usually, the companies that provide this kind of services, they are compliant with AML, with KYC, and all the local regulations are working pretty close with business to make sure that we are operating safely and as a traditional bank would. So I was really excited to share this with you today, because I think like it could open a new door for you, to give possibilities to expand your business to different places, or even to reduce the operational costs that you have today with cross-border payments, right? Or bringing more operational efficiency and reduce the need of liquidity on daily basis. So basically, that's it. I reserve like some time for questions. I don't know if you want to ask anything, but feel free. I think there is a mic there to make it easier. But yeah, that was it for today. Anyone? Any questions? Okay.
Thank you for the presentation. My question is to do with a couple of them. If the first one is like from the ESG angle, so it's like environmental energy consumptions, because by using blockchain technology, I heard that the energy using to generate those type of cryptocurrency is going to be huge. Given our target or our objective is to be net zero in the near future and protect the environment, so what's your view on that?
Yeah, there's a couple of different kinds of blockchains. So today, basically, we have two different types of settlement. One is the most known one, because it's the Bitcoin one, right? That actually use a lot of power and a lot of energy to settle it, because we need everyone from the chain to not anyone, but more than a half. We need thumbs up from more than a half of the chain users. And there's a different one. And this one, I agree, it's not efficient. That's why, for example, for Bitcoin, for daily operations, they are using Lightning Network, because it reduces the level of energy for settlement. But we also have a different type that we trust a player in the blockchain, and because he's trustful, he invests in the blockchain. So it's almost as a shareholder of the chain. Like we trust.
Sorry, do you mean the POS and POW?
Yeah, exactly, yeah. Exactly. So I believe like this reduce a lot of energy that you need to consume to settle a transaction.
Sorry, the other question is around like the consumer protection and the business protection. Because at the end of the day, I know like through the banks, you show the diagram about, the whole end-to-end journey could take longer and then take maybe more expensive to settle for cross-border payments. But actually, if thinking from the protection perspective, the banks exist for a reason, and if things goes wrong, compensations you can claim from the regulators, or from, in the UK they got FSCS scheme where you can find the way to claim. But with like using a blockchain or using cryptocurrency, the value of the currency is fluctuated. Like Bitcoin can go up and down more than 10% a day, and also other, even you mentioned about stable coins, and stable coin can be unstable. So the examples like FTX scandal 2 years ago, the whole company went down. Stablecoin was never picked to the the dollars or the fiat currency anymore. So how you see that kind of from the consumer business protection? Because we are all here to attend this e-commerce, expo. We as a business, we want the money to be safe, right? So what's your view on that?
Yeah, based on my experience, I think like with the fiat ramps, we still have protection for on and off chain, but I believe, of course, it's still a new technology, a new possibility, a new scenario. But I think it's the same with huge banks, right? Like we can have scandals, banks can go bankrupt. We've seen like huge events in the market. So I think like even though we have this trust, because usually they are entities that have been 100 years out there, the system also can have different behaviors and different fluctuations. So I think like we already have this opportunity. It's going to grow. It's going to be more stable. We're going to have companies that are going to outstand there as the trustful players. Because, of course, we have meme coins. We have a lot of uncertainty that can be created in this environment. But being honest with you and working closely to business operating here, I've just seen more advantages than disadvantages. Because the operational gains are so big that you can even provide a better service to your customer. So in general, I feel that, of course, you have risk, but in the daily basis, I see more happiness than anything else. Anyone else? Oh.
Hi, thank you for your presentation. I recently checked your Bitso Web3 wallet on the Google Play Store, but it says this item is not available in your country.
I'm sorry.
This say here, this item, this application is not available in your country.
Because it's a Mexican company and we operate in Latin. So like.
So this will be available in the future?
Yeah. So we of course we are going to expand, but right now we are a Latin only company. Yeah. Sorry. Okay. Thank you. Thank you, everyone.